So in my yesterday's video, I have specifically said that the trend is not clear, and you can clearly see what has happened as far as the overall indices in the Wall Street is concerned. Dow Jones down 249 points, Nasdaq down 120 points, similarly S&P down by 36 points. So the trend is not clear. Market looks very heavy, and market cannot run with one leg or with few sectors. It need to pop up with each and every sector side by side. So this is something which we need to understand. Anyways, let us see what is happening as far as the trend is concerned. Now this is the price chart of Dow Jones. This is the daily chart. First of all, we need to look at the indicators. That is very important. Although today, Friday the 10th of February, will be the last trading day of this week, but it is giving a very important indication. If you are looking at the stochastic RSI, it is clearly indicating, and if you zoom MACD, it is clearly indicating a downward trend. So you need to be very much aware about these signals before taking any price action, and we can clearly see how the trend looks like, and this is not at all positive. Yesterday I have specifically said to avoid Dow Jones, because Dow Jones was trading in between the range. So in between the range there will be a 50-50 probability, and that has happened actually. So let us see what is happening as far as Dow Jones is concerned. And if you are looking at the price chart of Dow Jones, you can see something like this. Okay, now the trend is getting narrower. That's what is very clear as far as the price action of Dow Jones is concerned. So whether this will be a breakout or a breakdown, we will get to know once the price moves beyond this range. But anyways, right now the trend is very clear. On the upside we have 34,287 or 290, which is going to be a resistance, and as far as the support is concerned, we have 33,326. So let's say 33,320 on the downside. Please don't go below 33,320, otherwise downside will open up. And let me for example, if Dow Jones settles below 33,320, the next support you will get is 32,560 or 550. Okay, this is going to be the range of 570, 32,570 and 560. That's going to be the range that will open up on the downside. Simultaneously, I mean, Nasdaq has already stretched a lot, and although the trend was positive, but let us see what is happening as far as Nasdaq is concerned. I think it has successfully, it hold on to its level. So the trend is not broken down yet. So here we are. You can clearly see that by any means, at the end of the day, it is holding. Okay, now whether it will hold on to its support or not, that's a very important question to be asked. So if it does not, then obviously we will take a downside trend, but if it does, then obviously it hits the support, and this is the perfect level to go long. That is also, or that is something which we need to look at right now. So the question is, what lies ahead? And for that, what do we have here? We have our support and stop loss at 11,750. Please don't go below 11,750. Although this is a buying zone, the current zone is the buying zone to go long in Nasdaq. But if Nasdaq falls below 11,750, obviously downside will open up, and the next downside below 11,750 will be the 200-day moving average, or 11,329 for the time being. And simultaneously, if the upside works out and if Nasdaq started moving higher from this level, then the range that we are going to look at will be in between 12,290 and 12,570-580. This is going to be something which we should look at for Nasdaq. So Nasdaq is well within the range. It has just tested its support, and if the support hold on, chances are it will go higher, but we need some confirmation. So if you still want to go long, just consider 11,750 as your stop loss. Most importantly, S&P 500. Let's see what S&P 500 is telling us. S&P 500 also showing the similar kind of move. I mean S&P 500 and Nasdaq, most of the time it has similar kind of move, but this is a very crucial support, because if S&P 500 breaks below yesterday's low, then obviously it's going to be a problem, because right now S&P 500 is trading in between a range and we are trading at the support. So when we are trading at the support, obviously there will be two sides of the coin, either a heads or a tails. So right now we can go long because S&P 500 hits the support like Nasdaq, but with a strict stop loss. If we want to go long, the indicators are not giving some positive signals, because indicators are indeed telling you a different story and price action is showing something else. So that's why even for S&P 500 you can go long, but with a strict stop loss of 4069, because if S&P 500 falls below 4069, then obviously 3993 will open up on the downside. And if it holds on, if S&P holds on to its support, then we will move towards or in between 4220 and 4290 on the upside. So this is something which we are going to look at as far as S&P 500 is concerned. So I mean, there is a very clear signal that the price is telling you something else and the indicators are telling you something else. Although the price are moving in between a range, but the indicators are going for a negative move. So there is a divergence which one must look at. So this is the end of the video. Thanks for watching.